Hello Michigan Realtors and welcome to the Accounting Corner, a video series that will address accounting and tax topics for realtors. I'm Colin Ohl, and today's Accounting Corner will cover tax tips for realtors. Tax tips in this video will include how to properly account for business mileage of your personal vehicle, meals and entertainment for business purposes, and the business use of a home office. These tips can help maximize tax deductions, which may result in significant tax savings. The first tax tip we will be discussing today will be how to properly account for business use of a personal vehicle. There are two ways that business use of a vehicle can be calculated to determine the allowable deduction. The first is the standard mileage rate method, which uses the miles driven for business to determine the amount of the deduction. The standard mileage rate can change from year to year. In 2017, the standard rate was 53.5 cents per mile, and in 2018, it is 54.5 cents per mile. When determining the miles that are business-related, it is important to remember that miles spent commuting between a taxpayer's home and the office are not deductible. Furthermore, any business trip in which the taxpayer makes a personal stop results in any miles incurred after the personal stop ineligible for deduction. To maximize the deductible mileage, it is important to avoid any personal stops during a business trip. It can also be helpful to install a mobile app that can automatically record every trip, including miles driven, time of trip, and locations. This is important as the IRS requires all mileage logs to be maintained. It can also help as the manual record keeping is significantly harder and prone to human error. This can result in lower deductions or potential penalties if audited. It should be remembered that all mileage for any business purpose can be deductible. This includes trips to meet professionals such as lawyers and accountants, or to stores for exclusive business purposes. The second method to determine the allowable deduction is the actual vehicle expense method. This uses actual expenses incurred by the taxpayer to determine the deduction amount. Expenses that can be used to determine the deduction amount include, but are not limited to, gas, lease payments, insurance, repairs, tires, and fees. The actual expense method still requires mileage to be calculated, as only vehicles used exclusively for business can have their expenses fully deductible. For mixed usage vehicles, the amount deductible is determined on a percentage basis. For example, a taxpayer who drives 10,000 total miles a year, with 6,000 of those miles being for business, can deduct 60% of the actual expenses incurred in the operations of the vehicle. Although you are not required to do so, it is best to calculate both methods and use the method that results in the higher deduction. For additional details, please see Publication 463 and Publication 583 on the IRS website. A link will also be provided at the end of this video. The second tax tip we will be discussing is when meals and entertainment are tax deductible. Meals and entertainment, when incurred for a legitimate business purpose, can be deducted in part or in whole, depending upon the circumstances. Meals and entertainment are deductible at 50% when the taxpayer is meeting individuals for a legitimate business reason, and business is talked about either immediately before, during, or after the meal. An example is meeting a client for lunch to discuss the type of house they are looking for. Meals and entertainment can be 100% deductible if they are made available to the public for promotional activities such as an open house. As with mileage, technology can be very helpful to ensure the accuracy. There are many applications that can be downloaded that can allow one to take pictures of receipts to track the applicable expenses, making the proper accounting of expenses far easier than keeping physical receipts. It is important to remember that not all expenses are tax deductible. In general, spousal expenses are not deductible unless it can be proven that the spouse was there for a clear and reasonable business purpose. Furthermore, Club dues and membership dues to country clubs and athletic clubs are not deductible. Given how many realtors entertain clients, the tax savings that can result from these types of deductions can be significant. Again, IRS Publication 463 can provide additional guidance on deductibility. The third tax tip we will be discussing is business use of a home office. To claim this deduction, the taxpayer must use part of their home exclusively and regularly as their principal place of business or meeting place of clients. To meet the exclusive test, the taxpayer must use part of their home only for business. Any personal use of this space will result in zero deductibility. The taxpayer must also regularly use a portion of their home for business. This means that the taxpayer must use that portion of their home on a consistent basis for business to be able to claim a deduction. A taxpayer is required to have their home be their principal place of business or principal place of meeting clients. When determining the amount of the deduction, the taxpayer has two options. The first option is the simplified method, which uses a prescribed rate of $5 multiplied by the square footage of the home office. This simplified option is limited to 300 square feet or $1,500. A second option is the actual expense method. With this method, expenses fall into one of three categories. The first category is direct expenses, which are expenses only for the business portion of the home. These expenses are deductible in full. The second category is indirect expenses, which are expenses that are incurred to keep up the entire home. These expenses are deductible based upon the percentage of the home that is used for business. The business portion of a home can be determined in any reasonable manner, with the most popular method simply using the percentage of the home's total square footage that is the home office. The third category is unrelated expenses. These are expenses incurred for the personal portion of the home, and these expenses are not deductible as they are not business related. It is recommended to calculate both methods to determine which method results in the larger deduction. For more information on the use of your home as your principal place of business, please see Publication 587 on the IRS website. Again, links to the previously noted publications will be provided at the end of this video. Thank you for spending the time to learn about the tax deductions that could result in significant tax savings for you. Mileage for the business use of a personal vehicle, the cost of meals and entertainment that have a legitimate business purpose, and a home office used for exclusive business purposes may result in substantial business tax deductions. It is important to remember that this video series presents a simplified version of the tax law in relation to these deductions, and anything presented here should not constitute tax advice for your specific situation. Each person's tax situation is different, and contacting a professional tax preparer is advised to ensure proper tax preparation. For more information, please see the following links. If you have additional questions or would like to suggest a topic presented in this new video series, please see the email listed below. Again, thanks for watching and see you next time.